I think there were several factors. One is on the business side. As far as individual loans were concerned, the growth continued to remain good right through the quarter. If you look at the growth on an AUM basis, our individual loan growth was as much as 17%, which on a base as large as ours is, to my mind, a very healthy growth. In the non-individual segment, we continue to remain cautious. We guided markets some time back that we are cautious. We have the ability to scale that up substantially once we start feeling confident again in the market. The spreads were stable, in fact marginally higher than what they were in the previous year. Our spreads in the previous year were previous quarter were 2.25%, and in this quarter spreads were 2.26%. Non-performing loans were also reasonably stable. Last quarter non-performing loans were 1.29%, and in this quarter non-performing loans are 1.33%. In the individual segment, non-performing loan is more or less the same. Last quarter was 0.72%, this quarter 0.73%. Net interest margin has also been stable at 3.3%. So all in all, I think it was a combination of growth, reasonably good asset quality, and also stable to slightly higher spreads. See, I can tell you, if we break down our business between individuals and non-individuals, in the individual segment, as I said earlier, we have not seen any kind of stress or anything which makes us more cautious or more worried or anything serious of that nature. In the non-individual segment, non-performing loans is a very technical definition, in the sense that if there are 3 installments that are overdue, irrespective of the security, irrespective of the equity in the project, the loan has to be classified as a non-performing loan. Now, as we know, sales, particularly of the slightly middle to high-end market, have slowed down a lot. So liquidity at times is a bit of a problem for developers. That is the reason why we are being extra cautious, extra prudent in making more provisioning. So we have historically, and this is not something which is started now or last year or year before last, it's a trend we've had for the last literally 20 years, where we've always provided much more than what was required by regulation. And that policy continues. This quarter, for example, we have charged a profit and loss account with 754 crores of provisioning. And on 30th of September, we were carrying a provision of 7,313 crores of rupees against a regulatory requirement of 3,559 crores. So our provision today is more than twice what is required by regulation. So it's very difficult to tell you what the NPL level will be next quarter, but what I can tell you is that the provisioning cover we carry is much more than adequate.